All right, welcome back to another workshop. I'm Ariel, and today we will be discussing credit and bankruptcy. So, mastering credit basics. This module will explain how to access and read your credit report, how to better understand your credit score, share strategies on how to improve your credit score. Just reviewing your credit report. The simple things: your credit report shows whether or not you paid credit card bills and loans on time, along with a few other factors. It also shows how much you owe to creditors and whether you have unpaid loans. Why is good credit important? Has that been something you asked yourself? So, good credit allows for you to obtain loans and credit cards with best interest rates. So, the better credit you have, the better interest rates you have. So, the lower interest rates you have. It can also improve your ability to rent an apartment, buy insurance coverage, get a job, and obtain a mortgage. So, we're focused on rent an apartment for the most part. Um, and sometimes, depending on what job you apply for, they do run your credit as well. Landlords, insurance companies, and even some employers can have limited access to your credit report. Your credit report can be used to verify your personal information, view your payment history, seek whether you've been sued or have declared bankruptcy, see how often you have applied for credit. So this is really important to creditors and just people who would like to see your credit report, how often you apply for credit. So that is reflected as an inquiry. So either hard or soft inquiry, depending on what type of credit application you're accessing or like what you're trying to apply for credit for. Hard inquiries are ones you have to look out for. Those are ones that stay on your credit report for 3 to 7 years, and that can bring down your credit score a lot if you have a lot of hard inquiries, especially within a small amount of time. So within like 6 months or 3 months or a few days. That's why you really need to know what your credit score is before like applying for different apartments, applying to get a car lease or a car loan, things like that. Because if a creditor sees that or a lender sees that on your report within like a week, you've gone to 3 different car dealerships, they're going to see that it's not worth wasting their time, or yeah, you're not a worthy person to lend to as a credit person, because obviously the people who ran your credit before coming to their car dealership didn't approve you, so why would they? Checking your score yourself. If you are working with an agency and have pulled your credit report for financial education or for credit counseling. Credit inquiries that credit card companies or mortgage lenders make in order to send you pre-approved offers. So this is something where you see might come in your mailbox, or if you use something like the app Credit Karma, these are tend to be soft inquiries. They only can see a various amount of your credit, and they say like, oh, you're pre-approved for this amount of money to be lended to you. So this is how you check how credit checks do not affect your scores. Checking yourself, all that stuff. Applications for new credit affect approximately 10% of your credit score. To avoid harm to your credit report, only apply for credit when you need it. You absolutely need it, okay? Consider limiting your applications to no more than 2 times per year. The same applies to retail credit cards. That's what I was mentioning a little bit ago about limiting, your time frame of how many times you consider applying for credit. Avoid applying for an unneeded retail credit card just to save 10% on the purchase. If you are shopping for a major purchase, such as a home or a car, multiple inquiries made in a 14-day period counts as just one inquiry. So creditors are more lenient because they understand that you're trying to buy a home. Sometimes, well, most of the time, car dealerships they don't really apply to this. I don't know. I guess it depends on the car dealership, but majority of the time, car dealerships do look at this and they kind of reconsider. But as far as like applying for homes, creditors tend to have a better better accepting or understanding of that. So if you are shopping for a mortgage, a loan that allows you to purchase a home, apply with various lenders within the same week to protect your credit score and to compare the best rates. How do you check your credit report? Once a year, you can request a free copy of your credit report from each agency through the annual credit report request service. This is only a source for free federal legislative annual credit reports. You can contact them directly online, by phone, or by email, or work with your local domestic violence advocate to request a copy of your credit report, which will be me. This is a website you can go to, so the annualcreditreport.com. Be aware that while you can obtain a copy of your credit report for free, the free report does not give you your credit score. Okay, it's just to know, what's on your credit. Knowing your credit score is helpful if you are getting ready to apply for a loan or another line of credit. To obtain your credit score from the 3 credit reporting agencies, you will have to pay a small fee. So the report is free, but the credit score is not. In addition to each of the 3 credit reporting agencies, there are lots of free ways to access your credit score. You can do this through several websites and credit card companies. A lot of banks have taken advantage of this and has added this to their services. So I know Go to One and Chase, they offer free credit score reports and things like that on your monthly statements. So that's something that's pretty cool. Make sure you find out which credit score you're looking at and know that it may be different score than a lender or business may be using to qualify you for a loan or service. So for example, most apartment buildings and landlords and housing managers, whatever, they look at Experian's credit report. And so you want to be aware of that when you're applying for apartments or houses. It is advised that you review your credit report at least once a year. Understanding your credit report. All credit reports contain the same general information: personal identifying information, credit history, inquiries, public records, personal identifying information, PII, this information that is personal to you that you should cautiously share with others. This may include your name, your birth date, your social security number, current and previous addresses, employment information. When you're reading your report, be sure to confirm that all personal identifying information is actually yours. If any of this is wrong, it could be a simple error or it could be a sign of identity theft. So look out for these. As far as credit history goes, it lists different types of credit accounts, such as mortgage, your real estate, credit cards, also as known as revolving debt, which is the worst debt you can have, or revolving credit, and installment credit, which includes a personal or auto loan. So installment credit is basically, it stays the same. So if you have a car loan that's $18,000 and you get a 3% APR interest rate, and your payment comes out to $377 a month, it's going to stay $377 a month until you pay off the car. Unlike credit cards, which is revolving credit, the interest rate stays the same. But if you're using your credit card and your balances are changing, and I won't get too deep in this, but there's grace periods and periods where, they're accumulating how much you spend. That can make your minimal payment change throughout the year. It's unlike installment credit. For each account, you should be able to find detailed information about payment history, balance information, creditor contact information, current status. And then for inquiries, let me go back so you guys see that. Sorry if I'm moving too fast. So for each account, you should be able to find detailed information about payment history, balance information, creditor contact information, and current status. Creditor contact information is really helpful because if you ever look at your credit history or credit report and you recognize something doesn't seem right, like you don't remember applying for this credit or, establishing this credit, it shows up right there on a report. You could contact them directly yourself and say like, hey, I'm just looking into this account. I was wondering what it's regarding. Because sometimes you may forget that you applied for something and it may have come under a different name, like you applied for a Target credit card but their banking doesn't say Target, of course. It's probably a different type of bank or business that, leases credit cards to Target. And so it might say something else, and that would be helpful for you. Or someone else might have taken something out in your name and you don't know it and you're just unaware of it. So you're able to contact the creditor and say, hey, this isn't me. How to go about, addressing this and whatnot. Inquiries. This is a list of creditors and other authorized parties that have requested and received a copy of your credit report in the last 2 years. Public records, bankruptcy filings, foreclosures, judgments, liens will also appear on your credit report. Understanding your credit score. A credit score and a credit report are two different things. Like I mentioned before, a credit report shows you a full layout of what's being applied or what's being factored into your credit and your credit score, but it's not your actual credit score. Credit scores are made up of 5 key factors: payment history, amounts owed, length of credit history, new credit, types of credit used. So what really weighs heavy for most credit scores, depending on what bureau you're looking at, is your payment history, types of credit you use, and amount owed. Okay. Length of credit is important for people, for lenders who are looking into your credit to see if they want to, offer you a new credit line. New credit is important sometimes because if you have like 4 new credit cards within 2 months and you're going to go apply for another credit card, the lender might say, can this person really afford to pay back all these credit cards? Are these credit lines? I don't know if I want to offer them a new credit line. But the other 3 are mostly what bureaus look at: the payment history, amounts owed, and types of credit. And this a lot of this is impacted on your overall credit score. Your credit score is calculated from the information in your credit report. So there are many different types of credit scores that are used for different purposes. Your credit score can vary across the 3 credit bureaus. Your Experian credit score might be different from your TransUnion or your Equifax score. These are the 3 bureaus, by the way: Equifax, TransUnion, and Experian. So like I said before in this slide, it depends on what they prefer to think of as the most impactful thing. But what I've witnessed most of the time is your payment history, the amount that you owe, and the types of credit you used. All right, the 2 most common credit scores that you might come across are FICO scores and Venture scores. FICO scores are typically what you find directly from a credit union, and Venture scores, for example, is what Credit Karma, the app, uses. FICO scores are still the most popular credit scores used by lenders. Venture scores are growing in popularity, and these are often the scores that you receive when you access your own score. So if you're accessing through, like I said, Credit Karma, it's usually a Venture score. Credit scores are made up of 5 factors: payment history, amounts owed, length of credit history, new credit, and types of credit. I guess they want to go over this again. So payment history is basically like showing how often you pay on your credit and if you're making minimal payments or more than minimal payments, and if you're making the payments on time. The amounts owed is their average. So say we all start off with 100% of credit and you use 80% of that 100%. That's going to make your score come down a lot because you're only supposed to use 30% of your credit at most. I recommend 10%, but 30% is good. It'll help you maintain a healthy credit score. So whenever you go over 30% on the credit line, it makes your credit score drop severely. Length of credit history, that means how long has it been since you opened your first line of credit. So if you're 18 and you open your first line of credit, it's going to count that year all the way up to whatever age you are now. So 7 years length of credit history or whatever, depending on what your age is. New credit, like I mentioned before, how many new credit lines you opened up within a length can affect the impact of the lender giving you another line of credit. And then types of credit is like student loans, mortgage, personal loans, car loans, credit cards, things of that nature. So those are all different categories of types of credit. So payment history is the most important factor in credit score, which includes payment information on specific types of credit, presence of adverse and negative public records. That's a negative. Public records, bankruptcy, judgments, suits, liens, wage attachments, etc. Collections items and delinquency and past due items. So collection items are also a huge impact because it means that you never repaid your lender and they sent it to a collections organization, collections agency, and sold your credit that you owe to that agency. And now you have to pay that agency through collections, and that reflects horribly on your credit score. Amount past due on delinquent accounts are collection items and severity of delinquency. So how long past due? So that impacts your credit score as well. Like how long has it been past due for? Time since there were items past due, adverse public records, or any collection items, number of past due items on your file. So these are payment history is the most important factor when factoring in your credit score. So make sure you pay attention to these items, okay? Oh, number of credit accounts paid as agreed, in good standing, basically. Amounts owed. Your score also considers how much debt you currently owe as a factor to help lenders decide if they want if they warrant you as a capable of taking care of due debt. They like to consider the number of accounts you have with balances, amount owing on all those accounts, whether you have a balance in certain accounts, proportion of credit lines used. So like I mentioned before, did you use 30% of each credit line, or did you use 80%? Did you max out all your credit lines? Proportion of balances to credit limits on certain types of revolving accounts. Those are credit card accounts, revolving accounts. Proportion of installment loans amount still owing. Proportion of balance to original loan amount on certain types of installment loans. Understanding your credit score, continue. So the length of credit and new credit. Length of credit, your credit score factors in how much time and experience you have using credit. Date that you opened your oldest account. Date that you open your newest account. Average age of all your accounts. Time since accounts open and time since account activity, because some accounts are inactive, like say you pay off your credit card and it's had zero balance for 2 years, and then it's up to your lender to close that account or keep it open. So that's what I mean by time since account is active, or account activity. The number of recently opened accounts, proportion of accounts that are recently opened by the type of account, the number of recent credit inquiries, like I mentioned before, time since recent account openings by the type of account, and time since credit inquiries. Reestablishment of positive credit history following past payment problems. So that's something to look into on how to factor in your score. Types of credit used. So credit scores also consider if you have experience managing different types of credit accounts, such as credit cards, auto loans, home mortgages, number of credit accounts. Your credit score is based on all these categories of information and not just one or two, okay? So all of these categories. Lenders may consider many factors beyond your credit report and score when making a credit decision. They factor in your income, how long you have worked at your present job, the kind of credit you're requesting, the collateral you may have to ensure the loan, which are your assets, something that you can put up for collateral just in case you can't pay the loan back. They will take your car away or your home away or your furniture, your business, things like that. Other things to consider, your score considers both the positive and negative information in your credit report. Late payments will lower your score, like I mentioned before. Establishing or reestablishing a good track record of making payments on time will raise your score. Your credit report and score do not consider, so they don't consider your race, religion, national origin, sex, marital status, income, age. Improving your credit score. Manage credit responsibly over time. Pay your bills on time. If you have missed payments, get current and stay current on those payments. If you're having trouble making ends meet, contact your creditors and see a legitimate credit counselor. This won't improve your credit score, your credit immediately, but you can help you begin to manage your accounts and pay on time. So that's something you just need to put an effort and work towards, okay? Pay off your debt rather than move it around. What they mean by move it around is like, there's a lot of credit cards and personal loans out here that says, we will pay off your debt for you, or a transfer, like a balance transfer credit card. So instead of keeping this $5,000 balance off one credit card and switching it to a balance transfer card, a credit card that specializes in balance transfers, and because it has like a lower interest rate or whatever the case may be, or maybe it doesn't have interest for the first 6 months, or maybe it doesn't have an annual fee for the first year. Those are great reasons to maybe consider that card, but it shouldn't be your first option when you're trying to pay off your debt, because you may be getting into a habit of just moving that debt from one card to the next, and then maybe moving it from a card to a personal loan, things of that nature. That's what they mean by do not move it around, okay? Don't close unused credit cards as a short-term strategy to raise your score. Closing unused credit cards will negatively affect your length of credit history. If you're not using your credit card, store them securely and make sure you're not incurring annual fees for cards you're not using. Don't open a number of new credit accounts you don't need. So don't open accounts just to have a better credit mix. It can negatively impact the length of your credit history. Only apply for credit that you need. Keep in mind, closing an account doesn't make it go away. A closed account will still show up on your credit report and may be considered by your score. Opening up a line of credit under a child's name is not a solution. Uses of child credit may seem harmless, but may result in damaging their credit. Limit their ability to get a job, rent an apartment, or buy a car. Not to mention that it's a form of identity theft and is illegal. Healthy active credit is essential. Even if you have had excellent credit in the past, if you are no longer using credit accounts such as loans and credit cards, your credit score will eventually drop. So the only way to keep a healthy credit score is to maintain a healthy active credit account. Managing debt is important, but building credit is equally important to a healthy credit score. The only way to build credit is by having credit accounts like loans and credit cards that are being used regularly and paid on time, and hopefully paid off the balance each month. As a domestic violence survivor, you may be dealing with unique credit issues. It's important to be aware of the following. Anytime you apply for a new credit card or agree to purchase something same as cash, you need to fill out an application. The application will ask for information such as current address, phone number, employment information. This information may be included on your credit report. If your partner still has your social security number, they may be able to access when you run your report and the information of your current address, your phone number, and employment information. As a domestic violence survivor, you may be dealing with unique credit issues. Let's continue. Any joint accounts with your partner, even if you no longer access them, may affect your credit negatively if your partner is responsible. So you may open up a bank account that requires you guys to run your credit. And it's a joint bank account, and now your partner is the only one who has access to that bank account. That can affect your credit. If you open up a credit card or you purchase a house together or a car together, but you no longer make payments on it, or you no longer have access to those accounts, and your ex-partner happens to stop making payments, that's going to negatively affect your credit score. If possible, have your name removed from any joint held accounts, okay? If your partner uses one of your credit accounts without your permission, you can file charges with the police. This may not lead to a criminal case, but having a police report filed may assist you in repairing any damage that is done. You should not be held accountable by a creditor if this is something that happens to you. You can use a copy of the police report to dispute any claims, okay? Some collection claims may have arisen due to domestic violence, may have had to flee housing suddenly. In this situation, a property manager company can't file for a collection. Understanding bankruptcy. All right, bankruptcy is the last resort, okay, you guys? It cannot clean up a bad credit record, and it will be part of your credit record for up to 10 years. Bankruptcy has a long-term effect, such as some businesses use credit reports to make employment decisions. It can determine whether or not you get a new job that you want, Your insurance rates may increase. It may be difficult to rent an apartment or to qualify for a home loan. Phone companies and other utility bills and services providers may look at your credit history before providing service. Here are different forms of bankruptcy you might consider. So there is Chapter 7 and there's Chapter 13. So for Chapter 7, it wipes out all allowable debts and provides certain personal property exemptions. The debtor gives up all property unless the state finds that the debtor needs to support his or own independence. So the debtor is you, and it's basically saying you give up all your property unless the state finds that you need to support your dependents, okay? According to legislation passed in 2005, many debtors will not be able to use Chapter 7 to wipe out debt. Instead, they must establish plans to repay debt within the 5 years under Chapter 13. So Chapter 13 ends a court-approved repayment plan. The debtor, which is us, keeps all property and makes regular payments on the debts after filing for bankruptcy. So it's very rare to get Chapter 7. It's not used that often. So Chapter 13 is most likely the one that you're eligible for. Bankruptcy usually does not eliminate child support, alimony, fines, past due taxes, some student loan obligations. Bankruptcy seizure exemptions. Each state has laws defining exempt and non-exempt property. Examples of exempt property include household furniture, furnishings, clothing, jewelry, tools of trade or business. So if you have a business and you have equipment that you need for that business, that's what they're addressing there. Social Security and other such benefits, including life insurance, may also be exempt property. Before you decide to file bankruptcy, consider to try the following strategies. Reducing your spending. Consider a smaller home or vehicle. If you reduce spending, you may be able to find the money to repay your debt. Talk with your creditors. Creditors are often willing to work out a payment plan to help you pay off what you owe, okay? So creditors are honestly people too. So they do often have empathy and sympathy for your situation. They are pretty good listeners most of the time, and they are trying to understand as best as possible. So long as you call them, you be kind, you be respectful, You clearly explain your situation and treat them as a human, don't call with an attitude. Or I know that we can be emotionally driven sometimes, but just call when you're calm and when you're focused, and just let them know your situation, and they'll most likely be willing to work with you to like lower your APR percentage, or to lower the amount that you owe, or work out some type of payment plan that works around your income, things of that nature. Talk with a nonprofit counseling agency. These agencies can help you create a plan to handle all of your debts. Talk to an attorney. Expert advice can help you understand the consequences of declaring bankruptcy. Consider debt consolidation. To pay your debt, you may be able to borrow against equity in your home, retirement savings, stocks, or other securities, or the cash value of your life insurance policy. So consolidating your loans is basically getting all your credit and loans that you owe, putting it all in one pot, one bucket, and it is held with collateral to your home or your retirement savings, stocks, and other assets. Thoroughly analyze the risk and consequences of this action, as they could be considerable. So before filing bankruptcy, just try these steps first before considering to do so. So that was the end of the presentation for this workshop. I hope you guys got information out of it. I hope I wasn't moving too quickly. And of course, like I said before, there are handouts and different printouts that I left with the case manager. Hopefully you guys had them throughout this workshop. If not, I'm sure they'll provide them to you as soon as possible. And always get in contact with me if you have any questions. And if I can't answer them, I will surely refer you to another resource. Have a great day. Enjoy the rest of your time and take care.